Hello guys, in this video we try to continue our steps to become a professional trader. Last video we have spoken about the importance of money. You should have money, you should raise more money, save more money because you will need it in the future. And we have said that swing trading is the easiest style of trading. You buy a stock at the end of the day, you search, you find the stock, you buy it, put stop loss, and next day, if it goes up, you'll be making money, and then you stay many days, weeks, or months until the end finishes, and then you have all your profits, and that's it. This is what we call swing trading, which is so easy if you follow the steps. Now, today, we try to see how to open a broker account. It means you have money, whatever money you have, 5,000 or 1,000 or 500 or 10,000 or 100,000 or $1 million, whatever you have as money. You decide that you are serious to begin a new adventure, which is to become a trader, a swing trader, okay? Now, the first thing that comes to your mind, how to get to the market in order to buy stocks. Okay, a stock is just a company and it has a symbol, and then if you want to buy shares, because see the thing, a company, when it is public, it means it is in a stock market. It is divided into what we call shares. Now you go to the market and you want to buy shares of this company. Let's say Facebook, it's a company, big company, you want to buy shares. The symbol of Facebook is called FB. It's just a symbol. When you say FB, it means Facebook. Now, you can't reach the exchange where the companies all are listed there. You can't reach that. So you need help. You need what we call a middleman. Who is this middleman? It's called a broker or a brokerage firm. A broker. A broker is just a company that you make an account, and from there they let you buy stocks or shares and you can sell them. Okay? This is called broker firm. Now, here you should do your homework because there are hundreds of brokers. Now, if you want to, you are interested to see all the things that you should see, okay? I will make another video explaining all the things that you should see in a broker, okay, before you apply. These are just my opinion criteria for a good broker, because brokers are not the same, okay? The commission, for example, when you want to buy a stock, let's say I want to buy 100 shares of Facebook, okay? Whenever you buy, there is a transaction. It means you should pay a fee. This fee is called commission. It could be $5, it could be $7, it could be $10. The brokers are different. So you should see that before you apply for a broker. Don't just go ahead and apply for any broker. You put a broker, you have brokerage firms, you click on one and you apply and that's it. No, you should search first. Okay? You should search for these brokers, and then you find one which is good for you, and then you apply, you put your information, and then you fund your broker from your account. There are ways to fund this, and that's it. You have money in your broker, that's it. And then you will be able to buy and sell stocks. Now, when you want to apply, there are many kinds of accounts to be aware of from now. I'm trying just to explain to you before. When you want to apply, before you apply, you should know this before you apply. Okay? Let's say you find a good broker and you want to apply for an account. Now, there are many accounts you should be aware of before you begin trading. The first account is called cash account. Okay? If you don't find this cash account like this in a broker, you should call the broker or tell him show me what is this, what is the cash account. There is what we call cash account. Second account, it's called margin account. And there is another one which is called Roth IRA account. Please, I will put all the information here at the bottom of the description. You try to see the description, and I will put all the information. Okay, at least when I'm speaking, if you don't understand a word or something, or you don't know how it is spelled or something, you will find these accounts in the description. Okay, now we have cash account, we have margin account, and we have Roth IRA account. Okay, so I will begin with the first one, cash account. Now, what is a cash account? Cash account is you put your money and you use your own money only. Okay, your money. For example, you put $2,000. Let's say you put $5,000. So you don't ask a broker to give you money or to give you a loan. Okay, that's it. It's called cash account. Now, in cash account, I don't know if you've heard of selling short. Selling short is when the stock is going down, you sell it and then you buy it back and then you make the profit. This is the opposite of buying and thinking that the stock will go up, okay, and then you sell it. This is called to buy long. It means you buy the stock at $20. If it goes to $20, let's say to $25, just you wait many days or many weeks. So this is called to buy long. Now, in trading, there is another way to do business, is to sell short. What does it mean? If you think that the stock is going down, you sell it. There is just a button, say sell. You sell it. When it's going down, you buy it back, and then you make a profit. So it's just a way to do business. Now, cash account doesn't allow you to do selling short. Understand from now. Okay? But understand that from cash account, you can change your account later to margin account. And I will explain now what is a margin account, which is another account. Okay? So at least you should know the difference before you make this account. The second account is called margin account. What does it mean? It means the broker gives you a loan and he doubles your money. For example, you have $5,000. He will give you $5,000. It will become $10,000. Now, why he gives you a loan? Because you need this money to buy more stocks. Okay? But it is a loan, okay? There is an interest rate. It means you should ask your broker when you want to buy a stock and to hold it for many days or weeks or months. You should tell him how much you pay. According to most of the time, interest rate is 2%, 3%, 5%, 6%. But you should ask when you want to use his money. If you don't want to use his money, it's okay. Because on the margin account, let's say you have $5,000. But the broker has $5,000 also. So you can buy more stocks. But if you, for example, you don't want to buy, okay. The broker doesn't oblige you to buy. And you don't have to pay any fees. You pay only what we call the commission. Understand that when you buy a stock, any shares, even if you buy one share, you have to pay a commission. This commission, you will find it in the broker before you make an account, you should see these fees and commissions. Most of the time it's $5. When you buy, you pay $5. When you sell, you pay $5. So let's say you pay buying and selling $10. This is called commission, and it's obligatory. It means whenever you buy, you get charged $5. Whenever you sell, $5. Okay, this is obligatory. Some brokers have, let's say, $5. Some you can find 7, some you find 9, some 10. So try to be careful and search for a cheap and good broker account. Okay, don't just go to some broker that are very expensive. Okay, this is one thing. Now, why do you need a margin account? You need margin account first in order to buy more, because he give you a loan $5,000 and you have $5,000. It becomes $10,000. You can buy more stocks, more shares, which is very good. Okay, this is the first thing. Now, the second thing, what is it? Is you can sell short a stock. If the stock is going down, you can sell short. It means there is a button that says sell. You sell the stock when it's going down, 1 day or 2 or 3 or 5, and then you buy it back. It's as if you are borrowing shares from your broker and you sell them, and then you give it back, and the profit, it is yours. But understand, since he gives you a loan, you should pay interest rate. If you stay longer, like 2 days, 5 days, 1 month, 2 months, so you should know how much is the interest rate. At least you understand. But let's say you are a beginner. You don't need to do selling short because it is difficult and it is for advanced students. Okay, you don't need that. But you can open a margin account. That's okay. No problem. He give you $5,000. If you need them one time, or you find a good stock and it's going up for many days and you want to buy more, it's okay. Okay. So we have seen cash account, your own money. You don't borrow money. We have the second one, which is margin account. It means the broker gives you as a loan $5,000 in order that you can buy more stocks. Okay. What is the third account? And this is most of the people in the USA, since we are in the USA. I'm not speaking about some people who are out of USA. I don't know. Okay, I don't know if they have this account or not. It's if you are from USA, it's very important that you get the idea. It's called Roth IRA. What is it? Here the government, USA government, has give you the right to make an account where you don't pay tax. If you make profits, you don't make tax. This is an excellent account. But most of the people here in America, although they have heard of it, but they don't use it, which is stupid. Why? Because you don't pay tax. There are regulations, okay? It's not you should have this account for more than 5 years, and after 5 years you can take all your money except for the profits. And each year you put $5,500. This is the maximum. You can't put more. Okay? But if you are interested to stay more, like 5 years, 10 years trading, or you make it as an investment, you invest for the long run, this is an excellent option. Because whenever you need your money in the future, like after 5 years or 10 years, you can take them and there is no tax, there is no penalty. This is excellent. But people, most of the people in USA, they don't know about it, and some they know and they don't think about it, because the margin account and the cash account, the other account, you pay tax if you make money that year. Understand that? So Roth IRA is better. But if you are staying longer, like 5 years, 10 years, more than 5 years, because if you want to take your money before 5 years, let's say each year you put $5,500. If you are 50 or more, you can put $6,500 for this year, 2017. So each year you should see your tax accountant, CPA. You should call him. The guy who does tax for you. You should tell him about this. How much money you should put into your account. Okay. So from now on, you have 3 accounts, basic accounts. Either cash accounts, you put your money. If you make money during the year, understand that you pay tax. Okay, this is the first. Second, we have the margin account. It's the same. If you make money, when you want to, you should pay tax. Okay, that's done. Number 3, Roth IRA. You don't pay tax if you stay longer, more than 5 years. You hold your money. You don't take out money. You don't withdraw money from your account because there is a penalty. There is a penalty and you pay tax. So if you are thinking to have money for longer time, you can do this Roth IRA because it's excellent. You don't pay tax. And this is one of the most thing that hurt people is tax, because all the people are taxed. The government gives you this idea, which is Roth IRA account, not to pay tax. I don't know why people all over USA, they don't do it. Some they don't hear about it. Some they know, they have ideas, but they are lazy to think about it. Okay, so these are 3 accounts, basic accounts. There is another account I will tell you. Maybe you have friends. You can make one account with many friends. For example, you have your girlfriend, or you have a friend, or you are 5 or 6 friends, and you want to put just a little bit, 1,000, 1,000, 1,000, and this account anyone can enter and anyone can do trade, or you can trade together. There is another account. Okay, it's called partnership account. Partnership account. You can call your broker and you ask about this. If you are just friends and you want to make an account, and you, for example, you want to trade together, each one have an idea and you trade together. Okay, so but most of the people, they don't do it because, you know, the matters of money, you know, it's very difficult to manage. So I'm just telling you that it exists if you want to do it with your friends. If not, there is no problem. Okay, so thank you very much for watching. As I told you, I'm making more videos about the same subject, which is how to begin swing trading. This is the second video. Now please go to the third video. Thank you very much.